Good morning. Not the best of morning if you're a bull, but some indications were evident yesterday, which is why the commentary about leverage longs not being the most prudent strategy. Be that as it may, let's figure out the newsmakers and the key movers in the markets today. So it was not just rising yields, by the way, though you could say that that was the principal reason why the US markets came off. But if you look at the key newsmakers, rising yields, 1.87, if I'm not wrong, weak banking earnings. All banking numbers are not looking strong in the US, that is Goldman Sachs, JP Morgan, and those also played their small part. From an Indian markets or an EM market perspective or an oil importing country perspective, oil is on the boil, and that's a big news maker, by the way. And PBOC's dovish pledge, so to say, a day after they tinkered the rates on the other side, they've come out and said it seems to be a start of an easing cycle, if you will, and that probably helps. Some time back, we put this chart out about how China usually has come to the rescue for global growth. Could this time around be the same? Let's wait and watch. But for now, the US markets were soft. Dow, NASDAQ, S&P, all of them came off, no surprise thereof. And yes, the principal culprit have to be the rising yields. There are two. So one, the NASDAQ is now sub the 200-day moving average. There's a sharp fall the last few days, and now it's sub the 200-day moving average. And that triggers, maybe triggers a few technical reactions from that market perspective as well. But if you look at the chart, it steadfastly observed the 100-day moving average all through the last few months, never quite breached the 200-day except for the month of March. And when it did that, you know what happened? Could this time around be the same? Remains to be seen. And of course, keep in mind that the rising US yields do bring about a fall in the PE ratio. Now, this is the inverted chart, by the way. The black line is the US 10-year real yields inverted. And as you can see, so now that they seem to be falling, but because the chart is inverted, you know that those yields are rising. So whenever the yields rise, look at the impact it has on the stock 600 technology index forward PE ratio. Forget what happens to the index itself, but the P ratio comes off. And currently, because the earnings are not necessarily in such a strong uptrend that they can thwart the P multiple derating, you're seeing the markets come off. Now, look at the relevance of this chart is, viewers, look at what's happened usually when the yields rise, as it happened sometime before 2020, and how there was a ferocious drop in the multiples for that index. Could the same again happen this time around? I'm not trying to scare anybody, just bringing you data. But yes, the markets came off, and I think the Asia and SGX Nifty indicate that the start would be or could be a bit soft in trade. We have the Hang Seng doing okay, but the other markets could be a bit soft. We've had a bit of a fall in the Indian markets yesterday, but pull up the SGX Nifty to just show you what is likely to happen at the start of the trading day today. Well, flattish move. Have we digested that, or could we have a bit of a problem? I think time will tell. The US futures are flat for now. Let's wait and watch if that's if that comes back to bite us later on in the day. So what's the trade setup? I mean, it's easy to say that the risk reward is not yet in favor of contra longs. Yesterday we were saying that the risk reward is in favor of short positions. Remember, luck by chance, whatever you call it, but it has shaped up that way. For now, the quant indicators, and this is not my intelligence, really quant indicators, but some quant indicators that I look at don't quite suggest that the risk reward is in favor of contra longs. So be mindful of that. The interesting bit is that while FI selling continues, banks are holding out all through October, November, December. FI selling was incessantly large, and banks continued to fall. This time around, in the month of January, banks have done well. In fact, there's this morning I put out a tweet quoting a market participant or a fellow journalist who's put out this data about how the bank Nifty month to date or year to date, as the case may be, it's the first month of the year, is up 7%, and the Nasdaq is down 7%. This is a big outperformance of the bank Nifty and the Nifty vis-a-vis the other global markets. So you have to keep that in mind. We've lost 1%. Even if we lost 2 or 3 more, even if we lose 2 or 3 more, we're still outperforming the other world markets and the massive and the mother market, which is the US market, by a massive margin. So keep that at the back of your mind. Okay, Virat, thank you for that. But this is the chart that I'm talking about. This is the data I'm talking about. It's a 14% outperformance for the bank Nifty vis-a-vis the Nasdaq. Tells you a story or two. In terms of, okay, thank you so much for this, Virat. In terms of sectors to watch out for, I still think real estate, based on my conversations with people, it remains a sector that people are focusing on. And oil upstream will continue to remain in focus, considering how crude oil is rising, $88 or $89. That's quite staggering, really, and that should keep the ONGCs of the world in play. So watch out for those for sure. Um, Very quickly, flows negative. FI sold about 1254 crores. DI is bought 220 measly. And in terms of results, Bajaj Auto has had a swift run up. Hopefully, the results don't disappoint too much. And then some of the others, including LTI, it's imperative for LTI to deliver this quarter, considering what they've done in terms of the stock price performance. Watch out for Syngene. It's disappointed the last couple of quarters. Can it come back? And Tata Communications, so much fancy for the stock. Let's see if it shows in the numbers. But in terms of fancied stocks which deliver numbers, there's none other than Bajaj Finance that you need to look out to. What a performance. Look at this. Net profit, 2125 crores versus 1146 crores. Fabulous performance there. Total income doing okay too. To my mind, on a quarter-on-quarter basis, this resurrection in the gross NPA and the net NPA ratio really stood out. For me, really, personally, the asset quality numbers have been very, very strong for Bajaj Finance, and that tells you a story or two. They are saying, Rajiv Jain said on the con call, that they are seeing the best collection efficiencies in 14 years, but they are watchful of how the third wave develops, and which is why, as a measure of prudence, they are carrying forward 4,800 to 5,000 crores worth of provisions. So that's pretty interesting. Now, let me first tell you what Credit Suisse is saying, then I'll tell you what I think. Very quickly, Credit Suisse's view, they are neutral with the target price raised to 8,000 rupees on a roll forward basis. The beat, according to them, was driven by higher than expected NIMs, which is a result of the better mix, higher cost of funds, and trimming of liquidity buffer. Fee income was strong too, even as the operating OPEX and provisions remain elevated. They increased their FY22-24 estimates by 4 to 5% on higher growth and higher NIMs. It's trading at 9 times forward price to book, which is 2 standard deviations above the 5-year average. My question to you viewers is, how has it ever mattered for Bajaj Finance, except for when the COVID threat came about or demon came about? When has Bajaj Finance ever been available cheap? That's the point I'm trying to make. They booked 7.44 million new loans in third quarter versus 6 million in third quarter of last year. They acquired 2.56 million new customers. And with the adoption of the super app, who knows, this might just continue, but then they acquire and retain the customers, and that might really benefit them. Watch out for Bajaj Finance. I don't want to sound overly bullish, but I'm just commending that the company is doing some very, very good things out there. L&T Tech, again, a company which is doing good things, but is the valuation a concern, much like Bajaj Finance? So they came out with numbers. The City view, I thought, was all-encompassing, and therefore I'm simply bringing that view. They were sell with a target price of 4,430. Why? They are saying it's a soft quarter, with revenues below expectations, and completely concur there. The growth was largely impacted due to lower number of working days and higher leaves versus past trends. And what I will ask the management today is whether they're seeing this continuing or whether that was a one-off. You will hear the management today, I think, at about 10 a.m. on BloombergQuint, if you want to tune in. They said that attrition is likely to stabilize from the fourth quarter, though at a higher level versus pre-pandemic. And margins were ahead of estimates, and the implications of higher attrition, leaves, etc., have to be monitored going ahead when it comes to the margins. So a bit of a challenging quarter considering the valuation that it trades at. Let's wait and watch if L&T Tech comes off a little bit in the session today. ICICI Pru Life, Credit Suisse view, and Morgan Stanley view dichotomy. I'm bringing both just to show you how the street is divided on the numbers. So Credit Suisse says underperformed, the target price cut to 520 from 540. They say the 3Q earnings are flat YOY and partly aided by COVID provisions release of 2 billion rupees. The 3Q APE growth remained below peers as retail production remained flat quarter on quarter and negative YOY, and non-linked savings declined 13%. Now, as against Credit Suisse's negative view, there's a Morgan Stanley positive view who are saying that outperform and the target price is 800 rupees. They believe that the third quarter value of new business or VNB rose 20% YOY, which is the estimate that, which is the metric that they are tracking due to better than expected VNB margin. As per them and as per the management, retail protection premium has seen a month-on-month sequential growth through the third quarter, and they take heart from that. So difficult to say what will happen to the stock, viewers, but I brought you both the views. Whichever view you concur with, you can take a positioning accordingly. Tata Elxsi, the numbers look very solid. Revenues were up 7% quarter on quarter at 635 crores versus 595. EBIT margins at 30.97 versus 28.5, and PAT up 20% at 150 versus 125. Strong revenue growth on top of that, strong EBIT margins. That's the key in L&T Tech. The revenues disappointed, margins did well. Very contrary to what companies generally do. Tata Elxsi, revenue did well, margins did even better. And that was a selling point. Won't be surprised if Tata Elxsi, even on a dull day, does well. As expensive as that stock is, it could well do well. You know, the Tata Elxsi's, KPIT Techs of the world are kind of in a different orbit right now. ISEC, okay, so here's the deal with ISEC. The numbers, revenue at 941 crores versus estimates of 839 crores, good numbers. Margins 64.6%, the estimates were 60.7%, good performance. PAT at 380 crores, Bloomberg estimate much lower. Again, good performance. There is a bit of a question mark that I have, and again, something that I'll ask the management, and you can tune in at about 10:15 for that conversation. The results were ahead of for all estimates. The retail brokerage area continues to be a problem area, I think, for them, because there are higher activations for them, but the retail revenues were flat quarter on quarter. Market share losses are persisting for the brokerage, and that is the question that will be asked to Vijay Chandok. When Angel One is doing so well, some others are doing so well. Are there a couple of things that are ailing? The stock could well do well on open, by the way. It is a strong performance. Just trying to draw the relative performance of an ISEC vis-a-vis some of the others. But let's wait and watch what happens there. Vedanta, a media report suggests that there is a block deal likely at about a 4% discount this morning. So could the stock start off lower? Most certainly will. From what I gauge from people in the know, the demand seems to be weak for the block. Very likely that the stock could actually start off lower and stay lower. Let's wait and watch. Unlike some other blocks, wherein if the block is very well subscribed, then the stock turns back. Maybe, just maybe, the deal could be different for Vedanta. But be careful. If you're already not in the trade, it was a bit soft yesterday and will be soft today as well. So be mindful of that. Some other stocks in focus include some 3 mid-size, small-size news result makers. Trident, strong numbers, revenue up 52%, PAT up 88%. You know they've done well on the operational front. Alok, a PBT this time around versus a loss of 74 crores. And DCM Shriram, revenues up 29%, PAT up 38%. Could well be having some moves. And lastly, the TRAI subscription data shows that for the month of November, there was a net decline of 90,000 industry active users in November. There was a net addition of 8 lakhs in October. So very choppy, really, what we're seeing when it comes to the telco data. Reliance Jio gained the most subscribers, followed by Bharti Airtel, and we continue to lose subscribers. So it's happening at the expense of we as to what's happening to these companies and telcos. Lastly, before we wrap up, just interesting to see the charts and the price movements of TCS, Tata Steel. Okay, there is a viewer query, I presume, on what to do with these companies. Now, I cannot advise what to do with these stocks, but suffice to say that most people who don't mind decent annual returns of 10, 12, 15% would believe that in a case of TCS, if you can tender in, if you buy less than 45 shares, then you count it as a retail subscriber. Do your math a little bit. But yeah, something around that, between 5 and 45 shares, then you're in the retail quota. You can tender it at about 4,500 or that price. And that's a cool 12, 13% as a gain that you make. So frankly, in a volatile time, 10, 12%, never too bad. So that is there. On steel, viewers, very, very difficult to figure out how these stocks could do going ahead. But let's wait and watch the numbers. I think JSW Steel numbers this Friday will give you an inkling of what is in store for some of the steel companies. The price has come off a little bit, so the valuations are not as outrageous as they were maybe a few months ago. let's wait and watch. I think JSW Steel numbers need to be analyzed before people make any views on the steel space. So thanks so much for tuning in, viewers. Have a safe, profitable day ahead. If you're stepping out, please stay master.